Hello friends, this is Raj Sastri from Raj Option Trading. Today is August 15, 2021. I want to quickly recap stock market activities last week and look at trading ideas for next week and look at best and worst performing stocks and also spot few good stocks to buy at this time. With that, let's get started and jump in. So from a major stock news perspective, we have five Chinese stocks to buy as Beijing cracks down. One of them is NetEase, NTES. NetEase has dropped so much, it's good right now to buy. And then we got growth generation here, GRWG, reports second quarter results and stock drops after price target cut from 50 to 50 from 67. I think at this point, growth generation is a good stock to buy. It's a pick and shell play in the cannabis world. I think stock is punished at this time. We should look at buying growth generation slowly at these levels. Then we got Coupang.com. Stock dropped 10% after widening loss. I think this is a great company. Works in South Korea markets. I think it's a good one to buy at these levels. And we got Hims and Hers, ticker symbol HIMS. Stock jumps 12%. This stock used to be down for a long time. Now it's showing some signs of improvement. And then you got here Southwest Airlines, ticker symbol LUV, warns Q3 unlikely to be profitable as Delta variant shows booking cancellation rise. So with this in mind, we should probably look at Southwest Airlines, ticker symbol LUV, Delta, and even United Airlines, and look at some of these, even American Airlines. Look at some of these airline stocks at these levels and buy slowly because normally there will be scare, stocks drop, and then there will be some good news, stock will pop up. And then you got Unity Software, ticker symbol U, raises outlook above Wall Street estimates. So off late, as you might have seen, all the video game stocks are not doing well. So with that in mind, I would look at buying Unity and also Take-Two Interactive, which is TTWO, and even Activision Blizzard, ticker symbol ATVI, and EA, Electronic Arts. Look at buying some of those stocks, including Zynga, ZNGA. And we got second-hand retailers. Poshmark TradeUp reports steep hikes in revenue. I think at this point we should look at all the second-hand retailers like Poshmark, TradeUp, even Real for that matter, and even Farfetch. Look at some of those names and buy slowly because everybody is a little bit worried with the Delta variant. I would look at those stocks slowly, and you could also add other stocks into the list, like Stitch Up as example, Stitch Fix as example. And then we got here Smile Direct, ticker symbol SDC. Stock drops after cyber attack and pandemic dings the results. I would look at Smile Direct at these levels and buy slowly. And then you got animal health company Elan, ELAN, Elanco Animal Health. Stock sinks after the profit drop, and I think revenue doubles here. Outlook is mixed. I would buy some Elan at these levels. Stock has dropped so much, it's good to buy. Animal health is a very good trend going forward. And then you got Air Products, APD. Profit comes short of expectations, but revenue beats. Stock drops. I would buy some APD at these levels and hold it for a while. And then we got here ITRI. Stock drops big time and it slowly bounces back. I would buy ITRI after this huge drop and some bounce back. And then you got Beyond Meat here. Stock dipped 4%, bigger than expected loss, Q3 warning. I would pick up some Beyond Meat at these levels and hold it for a while. Stocks like Beyond Meat, they will always make some good news. It's a growing trend that people don't want to meat too much. They want some of the renewable type, plant-based food. That's why this stock can go up as we go forward. So with that, now let's jump in and look at some macro trends and see what's going on and look at some of the stocks as we go forward. From a big picture perspective, we got S&P 500 at all-time high. This is a 3-month chart, daily 3-month chart. And then we got here a Dow Jones Industrial Average at all-time high again. And Nasdaq, same story, almost at all-time high, as you can see here, just a stone throw away. And then you got Russell 2000. It's Russell 2000, which is a low market capitalization stocks. It's painting a different picture here. It's saying, hey, you know what, don't be so confident, stock market might pull back. So Russell 2000 is always looked upon as a leading indicator. The leading indicator tells you, hey, be a little bit careful, don't party yet, we are not out of the woods. So with that in mind, I would expect some market jitteriness next week, and stock market can sell off on some days, especially because we have Russell 2000 telling us, be careful. And then you got here bonds. I think after steep drop here, it's making comeback here. That will also put some pressure on the stock market in general. Interest rates are coming down. This can have some impact on bank stocks as you go forward, but they had a nice run, as you can see here. And then you got crude oil. Crude oil is kind of trading sideways at this time. And gold, after dropping big time, it's showing some strength here. And then we got here, dollar is not strengthening, it's coming down. That's helping both gold as well as crude oil. So at a nutshell, as you look through this, bonds are strengthening, and defensive plays like gold is also going up. So that tells you, if bond and gold are going up, typically, you got to watch on the stock market side. There may be some pressure on the stock market in the coming weeks. So with that, let's jump in here. Look at S&P 500 and skew on a 5-year chart here. As you can see here, we got S&P 500 doing nicely here. Keep watching the skew here. As skew touches around 150 type levels, typically stock market drops. Here it touched 150 level. Stock market promptly dropped. This is a big sell-off. And then we got one more here. Stock market touches around 145 150 range, and again stock market dropped promptly. Now we are touching 150 160 level again, so you got to be careful at this level. That's a, as you can see here, it's the red line drawn on the sand that tells you, we can take only so much. As it hits 150 levels, it's even more than 150 now. You can expect a stock market to drop next week and giving some of this profit back. And if you look at VIX here, VIX is doing nothing for a long time since say August time frame, last 2020 August or so. It's kind of steadily going down slowly. So at some point you would expect VIX to pick up as stock market drops. So it may be okay to buy some long-term VIX options just as a hedge, and take it from there. Now we'll look at major indices. Nothing strange here, something similar to what we've seen. SPY, DIA, QQQ, all are doing great. They're almost at all-time high. But IWM, which is Russell 2000, it's telling you, hey, you know what, not so fast. There may be some jitteriness coming your way. That's why the leading indicator, Russell 2000 is telling us, hey, wait, be cautious. So I would look at this as a signal here, and don't buy, stocks that are going up too much. Look at some conservative names and buy them. So that's the way to go here. And then we got here TLT, which is bonds. Bonds are going up. That's a little bit difficult sign for stock market. We have to watch out here. Gold is also going up. Defensive play, gold is going up. And XLP, consumer staple, going up. XLU, which is utility, is going up. Typically, the gold, XLP, XLU, even Excel. These are typically defensive plays. As a defensive stocks goes up or defensive sector goes up, people are really a little bit worried on the broader market. That's why you can expect some softness in the stock market, especially in the major indices, as these defensive plays are going up. And then you got technology at all-time high, which is XLK. Semiconductor is dropping a little bit. Now it's showing some strength. I would pick up some good semiconductor names, stocks like Nvidia, and even stocks like Taiwan Semi as an example. We'll go into some more details in the charts and stock lists here. And then you got XAR. These are big jets and Lockheed Martin, Boeing, some of those stocks. They are falling off, as you can see here. It's good to buy some of those defensive contractors and hold it for a while. And then you got XLE, energy cohort. Think about big names like ExxonMobil, Chevron, EOG. Some of those stocks are really in the trading range here after dropping big time. I would buy some good names here and hold it for a while. And then you got XRT. XRT is all over the map. It's bouncing like a softball, as you can see here. There's a big news around COVID Delta variant. XRT drops. I would buy this as a trading opportunity here. As this drops, XRT drops. Pick up some good names in the retail world and trade them up and down. That's a good way to play this XRT, especially with the market changing its mind on the Delta variant. I would pick up some of these good names in the retail world and trade them around. Good names are really TJ Maxx as an example, Ross Stores, and even Kohl's for that matter. You could pick up some of those and trade around. And then you got IYR. It's basically big real estate type stocks here. Real estate, as you can see here, it's pretty in a pretty good trend here. I would, whenever there's a downturn, as you can see here, downtick, I would pick up some real estate names. Think about Pulte Homes, PHM, Toll Brothers, Dr. Horton, some of those stocks that we will look at as we go forward. I would buy them on any weakness and take it from there. And then you got financials. Nothing surprise here as bond market dropped off here, as you can see here last week. XLF went up. This is how big banks make money off of your deposits. As bonds came down, interest rate went up. That's why financials did well. But now, as you can see here, interest rates are dropping a little bit with bonds going up. That's why bank stocks are coming down a little bit. What I would typically do is really when there is a big scare and interest rates are coming down, I would slowly pick up some good bank names like JP Morgan, Citibank, Bank of America, some of these good bank names, and then hold for a while. I've been picking up some of these names as XLF draft off. Those are good ones. I'll be slowly position trading, meaning when they go up like this, I'll be taking some chips off the table, so that way you can be in the game all the time. And then you got XLI here, big industrials. As you can see here, they're doing great. Now they are showing some jitteriness here. So we should watch for big industrials as President Joe Biden kind of works on this infra bill. Some of these big industrials can do well. So we'll buy industrials on any weakness and go from there. Now we look at some of these big stock names. This is an eye chart. I will no way go into too much detail, but at the outset, by looking at this, you can look at certain trends here. As an example, look at Microsoft here. It's a rocket ship. As you can see, I got a 100-day moving average, which is the yellow line here. I got a 50-day moving average. That's the blue line here. I have a 25-day moving average, which is the green line. The moment you see here the moving averages are a little bit diverging, and distance is a little bit far apart. That tells you it's a strong bull market for Microsoft here. As you can see here, the distance between the 100-day moving average and 50-day moving average is very far apart, and same is the story with the 50-day moving average and 25-day moving average. So for stocks like Microsoft at these levels, the best trading methodology for us is really, if you're a long-term stockholder, buy them, no big deal, hold for a long time. But if you're a swing trader, look for anytime Microsoft falls below 25-day moving average, for example over here, that's a good trading opportunity. And also, as you can see here, it's try to hug or come down to 25-day moving average somewhere here. Good opportunity. Right now it's away from 25-day moving average. So with the strong stocks, trending stocks like Microsoft, use a shorter term moving average like 25-day moving average to do any swing trading. And same story with Apple, very bullish here. We got 100-day, 50-day and 25-day moving average. Anytime Apple comes below these moving averages, for example over here, came down even below 100-day moving average, bounced off. Right now it's trying to come down to 25-day moving average, bounce right back. Now it's kind of using the 25-day moving average as a support level. So I think it's a good one. As it comes below 25-day moving average, you can buy some Apple. It could be a very good swing trading opportunity. But I would also would like to have you Apple and Microsoft as a core position in your portfolio, so that way you can have this nice appreciation as you go forward. On the other hand, Amazon.com, as you can see here, stock had dropped after the earnings announcement big time, and now it's trying to search for direction. So it's right now it's clearly below 200-day moving average, which is a red line, below 100-day moving average, and below 50 and below 25-day moving average. So at this time it's trying to use 25-day moving average and 50-day moving average as a resistance level, and try to see if we can break above the resistance and reach up to 100-day moving average. So stocks like Amazon.com here, I would be a buyer slowly at these levels. With the new CEO Andy Jassy, he can do very well. I would be buying slowly and accumulating into this weakness. Anytime you see 200-day moving average above shorter term moving average, that's a bearish sign that, hey, right now stock is not doing great. We want shorter term moving average to be above longer term. For example, if you see Microsoft or Apple, the shorter term moving averages 25 and 50, they're clearly above longer term moving average, which is 100-day moving average. So that's a bullish indication. This is a bearish indication where longer term moving average is above the shorter term moving average. And on the other hand, we got here Facebook, clearly nice bull market here. We got shorter term moving average, which is the green line, above longer term moving averages, which is 50-day moving average and 100-day moving average. So with Facebook, the strategy is trade off of probably a 50-day moving average here. Anytime stock comes below 25-day moving average, that's a good sign for you to pick up some stock and then go from there. So that's a good strategy for stocks like Facebook. And then you got Google here, rocket ship, as you can see here. But one thing to watch in Google, observe and look at the distance between 25, which is the green line, 50, which is a blue line, and 100, which is the yellow line here. The distance is narrowing. That tells you Google is not as bullish as Microsoft or Apple for that matter. Look at the distance between these moving averages here, pretty nice and doing nicely. Whereas Google, all these moving averages are coming closer and closer, tightly hugging each other. That's why Google is not as strong candidate as Microsoft and Apple. So, and also as you can see here, IV percentile is 1.8. So which tells you, Google, you got to be a little careful, but you may be okay to buy. As you scan through this, anytime Google hits 100-day moving average, it tries to bounce off. So you can look at either 50-day moving average or 100-day moving average as a entry point. Anytime stocks hits those, you could use them for swing trading opportunities. And Google is a core holding. You should have some Google in your portfolio. Anytime stock drops like this, as an example, it came down below 50-day moving average, you should buy some Google and put it in your long-term core holding portfolio. And then you got Netflix here. Netflix, as you can see, after the earnings announcement, stock came down and touched the 200-day moving average, and now it's bouncing off of 200-day moving average. So I would buy some Netflix at these levels. I've seen the movie before. Netflix typically drops and comes back nicely. I would pick up some Netflix whenever there's a short-term drop like one we had last week. And we got Nvidia here. Nvidia is again a rocket ship, as you can see here. Nice distance between 25, 50 and 100-day moving average, as you can see here. Nvidia is trying to bounce off of its 25-day moving average at this time. Anytime Nvidia breaks below 25-day moving average, that's a good opportunity. Typically it tries to bounce off of 50-day moving average, as you can see here. Low IV percentile at this time. If you're an option buyer, you could buy some long call options for Nvidia. I think it's a good sign also. Typically I recommend delta 70 and lower if you're an option buyer. And then you got here J&J. I love J&J. They're a great stock, great financial position. As you can see, a nice distance between the 25, 50 and 100-day moving average. That tells you stock is in a bearish territory right now. This stock always gives you opportunity to buy. For example, it broke down below 100-day moving average, good buying opportunity. Same story, broke down below 25. So I would wait for this stock. It always gives you opportunity. Whenever it breaks down below 25-day moving average, buy some J&J. And then you got here PayPal, one of my favorite stock. It's dancing around its 100-day moving average, as you can see here. I would buy some PayPal at these levels. It's a great stock. It typically bounces off of its 100-day moving average, as you can see here. Right now it's trying to decide where to go. And then we got UNH here. It's one of my favorite stocks in the healthcare sector, a big insurance company when it comes to health insurance. As you can see here, this also typically bounces off of 50-day moving average here. Right now they're in the process of bouncing off of 50-day moving average. I would buy some UNH at these levels and take it from there. One thing I'll point out is really think of SIM. I think from a chart perspective, we have some issue with the earnings date. Don't pay too much attention to earnings date here. It says 8/13, but earnings have already happened a while ago. So don't pay too much attention. If there is a future earnings, pay attention there. But typically look at this light bulb symbol here, or a telephone line symbol here for earnings. Don't pay too much attention to the past earning dates here. It's not correct. And then we got here Merck. Merck, as you can see here, stock is below its 200-day moving average, which is the red line here, and it's trying to bounce off of its 25-day moving average. Typically, whenever Merck is below its below at these levels, I typically buy some Merck. It always gives you very good trading opportunities. It goes up and down and up and down. It's also a core holding. It's nice, pays a nice dividend. I think you could have it in the core holding also, but it gives you very good trading opportunities. Typically bounces off of its 50-day moving average. Right now it's even below its 50-day moving average. And we got Medtronics here. It's again one of my favorite stock. It's into the healthcare sector. They got these big machines for for your elective surgery. As you can see here, this also is a great trading stock. Stock comes down all the way below 100-day moving average, bounces back, touches 100-day moving average again, and touch the 100-day moving average and bounces back. I would buy this stock when anytime it breaks below 100-day moving average, or even for that matter, if it breaks below 50-day moving average, you could start buying slowly and take it from there. Nice opportunity to make some money with Medtronic. And then we got here JP Morgan. JP Morgan, as you can see, are not as bullish as Microsoft or Apple. The distance between the moving averages are not great. Right now, it's in a bullish crossover. As you can see here, the shorter term 25-day moving average is trying to cross over the longer term 50-day moving average, which is the blue line here. That's a bullish crossover if it happens. But right now, with the interest rate falling, JP Morgan is trying to come down a little bit, as you can see here. So I would wait and watch. I would not buy JP Morgan at these levels. You should probably buy this when it drops below its 50-day moving average and hold it for a while. Berkshire Hathaway, on the other hand, they had a nice bullish crossover here. Now stock is coming down a little bit with the whole interest rate scenario. Interest rate might come down. That's the reason. Stocks like JP Morgan, Berkshire Hathaway, I buy them on the weakness whenever they are below their 50-day moving average, or come whenever they drop below the 50-day moving average. That's a good time to buy these bank stocks and even big stock like Berkshire Hathaway. Then we got Visa here. Visa, one of my favorite stocks here. Visa, Mastercard, PayPal, Square. I like all of them. Fintech plays here. Right now, as you can see here, Visa is falling below its 25, 50, and trying to bounce off of its 100-day moving average. Stock is at 232, 100-day moving average is 232. I would buy some Visa at these levels. It will bounce back from its 100-day moving average and do well. And then you got Home Depot here. Home Depot is a great stock. As you can see, typically it bounces off of its 25-day moving average, but sometimes it will go below 100-day moving average. I would typically use 25-day moving average as a entry point here, but if it cracks through 50, I will add more Visa to my portfolio. It's a great stock in a long-term play. So with that, we'll look at one more chart here with a few more stocks here. Oracle with the Larry Ellison, co-founder, Safra Catz as the CEO. Nice bullish trend here. See the distance between the 100-day moving average, the yellow line, 50-day moving average, the blue line, and the 25-day moving average, which is the green line. So it's a nice bullish trend right now. It took off after the earnings, as you can see here. So with stocks like Oracle always gives you trading opportunities around the earnings. As you can see, a stock dropped big time, went up after the earnings. Oracle's earnings will come up in a month or so. Typically, they report a little bit late. I would, buy some Apple after the earnings. Right now, it's showing so much good strength here. I would probably wait for a little pullback before I, buy some. Typically, if it cracks below the 25-day moving average, I will add little position. If it cracks even below 50-day moving average, I would add a little more. So that's how I trade Apple. Typically, I wait for the earnings, but if the stock is sold off before the earnings, I would buy some, but otherwise I'll wait for the earnings. And then you got SAP here. SAP is again an enterprise software company, as many of you know. Right now, it's in a bullish trend. It's above its 100, 50, and 25-day moving average. Typically, SAP also has some fireworks around the earnings. Because stock is so strong here, I would typically buy this, around the earnings time frame. And you can also buy it whenever it cracks below 25-day moving average. You could buy some, add more as it cracks down below 50 and even below 100. So as you can see here, SAP has been dancing around with the 50-day moving average for most part and 25-day moving average. Then we got Shopify here. Shopify, as you can see here right now, Shopify is in a bearish trend. It's below its 200-day moving average, below its 25 and 50-day moving average. So anytime you see longer term moving average above the shorter term moving average, that tells you it's in a very bearish trend right now. So RSI is 50, that tells you it's a pretty strong still. IV percentile is very low. You could buy some long-term call options also for this at a cheaper price. So with the stocks like Shopify, I would probably buy a little bit at these levels. As a squint and see here, it's trying to bounce off its 25-day moving average. First it will take its 25-day moving average and use it as support level. Then it will try to bounce off a 50-day moving average. So that's how it really typically goes. As you can see here, same thing happened here. It was very bearish. Then suddenly things changed. We got shorter term moving average going over longer term moving average. So that's how you kind of trade stocks like Shopify. Here it's the bearish, turned into bullish. Now it's bearish, it will slowly turn into bullish. I would buy some Shopify at these levels. Little pricey stock, but it's okay to buy in little quantity, even fractional share if you want to buy them. On the other hand, Snap, after the earnings, stock is doing great. Nice bullish territory here. Look at the distance between the 100-day yellow line, 50-day blue line, and 25-day green line. So I would wait for a little pullback here. If you want to trade this, whenever it hugs 25-day moving average, which is approaching slowly, you could buy some Snap stock here. If it cracks below 100-day moving average like it did here, I would add more. Snap is a great story. I can see Snap going above $100. And if you pay close attention to VWAP tells you, where it might go. Stock is at 674.62, VWAP is 74.81. That tells you stock has some, still, high momentum above the current stock price. So that you can, try to understand by looking at VWAP where the stock might go. Will it go above the current price or below? And then you got Twitter here. Twitter again in the negative territory. As you can see here below its 100-day, 50-day, it's trying to bounce off of its 25-day moving average. I have confidence in Jack Dorsey, co-founder and CEO. I would buy some Twitter at these levels and go from there. Very low IV percentile. If you're an options trader, you could buy some Twitter at these levels, long-term Twitter, delta 70 or higher, with very little premium because IV percentile is so low. And then got Take-Two Interactive. As I talked about earlier, I love all video game players stocks at these levels. Take-Two Interactive, Electronic Arts, which is EA, Zynga, Activision Blizzard, all are good. Even NetEase, Chinese stock, all of them are good at these levels. Right now, as you can see, are strongly in the bearish territory. It's below its 200-day moving average, below its 100-day moving average, and 50-day moving average and 25-day moving average. So it's trying to make its comeback here. I would buy Take-Two. You rarely get opportunity to buy Take-Two Interactive at these levels. Bearish right now, it's good to buy right now. And then you got AMD here. AMD on the other hand, nice bullish trend here. Look at the distance between the 100-day, the 50-day, which is the blue line, and the 25-day, which is the green line. Nice distance here. Stock typically bounces off of its 25 and 50-day moving average. If you want to buy some, wait for it to touch 25-day moving average around $101, and then you could buy. This stock has given great opportunity to buy. Last month it was well below 75-80 range for a long time. So I would buy some Nvidia into any weakness. I have got confidence in the CEO Lisa Su. She can turn the company around nicely. And then you got mRNA, Moderna, as you can see here. Look at this bullishness here. We got the 100-day yellow line, and the blue line, which is the 50-day, and the green line, 25-day. Typically, this stock trades around its 25-day moving average. I would buy some Moderna. Even up here, it's good to buy some Moderna. They typically, go up as you go forward. Moderna, one thing to watch out is it's very high from a valuation perspective. That's why I don't buy too much. As it touches its 25-day moving average, buy some and hold for a while. This also gives very good trading opportunities. And then you got American Express here. American Express, as I love American Express. Right now stock is dropping off, as you might expect. News around Delta variant, people may not travel as much. That's why it's coming below its 50-day moving average. As you can see here, stock kind of bounces off of its 50-day moving average. As you can see here, anytime it's below 50-day moving average, I would be a buyer of American Express. It will trend, it will basically use it as a support level and bounce off. But right now, as you can see here, the distance, pay close attention to distance between the 100-day, 50-day and 25-day. So distance between the 50 and 25 are decreasing, as you can see here. So that's why it's a little bit bearish. So I would buy at these levels as it comes below 50-day moving average. I would buy some American Express here and take it from there. And then you got CVS here. CVS is one of those stocks which is left for dead for a long time. These guys are into pharmacy, and they also have some medical health insurance business. As you can see here, stock is doing nicely off late. It's above its 100-day moving average, and right now 25-day moving average has had a bullish crossover above 50-day moving average. That's a bullish sign. I would buy CVS on any temporary weakness. Right now there is some bullishness here, and go from there. And then you got AbbVie here. AbbVie is again a great stock. This stock always gives you buying trading opportunities. There's a big scare around the Alzheimer's drug. Stock came down big time, then went up, came down. Typically, as you can see here, if you're a little bit longer term swing trader, you could use 100-day moving average as a entry point here. But I would like to use 50-day moving average, for a weekly type month swing trading, because anytime it goes below 50-day moving average, you could buy some and come bounces back nicely. That's the strategy you could use for AbbVie. Right now, I would say wait a little bit for it to cool off and then buy some AbbVie. Then we got here Edward Life Sciences, again, a company that makes medical devices for elective surgery. Typically, you can buy this stock, and it nicely bounces off around its 25-day moving average, as you can see here. Anytime it cracks below 25-day moving average, you could buy some. Even up here, you could buy Edward Life Sciences. It's trying to bounce off of its 25-day moving average as we speak. On the other hand, we got here Bank of America. As you see here, it also has a bullish crossover. All the financials at the bullish crossover. 25-day moving average is trying to cross above 50-day moving average. But what I would do is really, because it's went up like a rocket ship of late, I would wait for a little pullback here. With the interest rate dropping, you could buy bank stocks at a little bit lower price. That's what I would do. Same story with the Citigroup. On the other hand, Mastercard, I would buy at these levels. It's trying to bounce off of its 200-day moving average, as you can see here. I would buy some Mastercard. Even if you're an options buyer, you could buy some long-term Mastercard options, given IV rank is very low, 9 at this time. And even right now RSI is also low. Stock is completely oversold. I would buy some Mastercard at these levels. Lows on the other hand, as you can see here, it's trying to decide where to go. Right now, looks like it's using this 100-day moving average as a nice bouncing pad here at the support level. I would buy some lows at these levels. It's a great stock. Typically bounces off of its 100-day moving average nicely. So with that, now let's look at some major ETFs and take it from there. From a major ETF perspective, I have sorted these in a monthly, performance here. On a monthly performance, nothing strange here. Utilities are doing nicely, financials are doing nicely with the Joe Biden's um, infrastructure bill. Even materials are doing nicely. In a nutshell, all the defensive plays are doing nicely at the top, but all the speculative plays are at the bottom here, including Russell 2000, which is a low cap stocks. So you got to be a little bit careful here as you scan through all the way to the last column here. Um, Technology is all-time high. That's the VGK here. And if you scan through here, S&P 500 all-time high. So you got to be a little careful here. Don't buy stocks which are going up too high. If you were to pick something, I would pick maybe in Russell 2000 some good names here, and even EM, FXI. At these levels, I'm a buyer in FXI. These are Chinese long Chinese stocks, large cap Chinese stocks. You could buy some large cap Chinese stocks like Alibaba, NetEase, and even Bilibili and some of these stocks, and hold for a while. I think China stocks they are punished enough and good to buy. If you don't want to play individual stocks, you could also buy FXI at these levels. It will give you a nice bounce back as you go forward. Now we got ETF winners. As you can see here, Bitcoin has made a nice comeback. I like how Ethereum and Bitcoin, they bounced back nicely in a monthly time frame. These were really doing very bad last month. Now it's turning around. At this time, I would not chase these. I'll wait for it to come back a little bit. As you scan through here, pay close attention to RSI. Everywhere the RSI is above 55, so I would not chase this. I would wait for these to cool off a little bit. On the other hand, if we go into ETF losers, this is where I pay close attention to. As we talked about, we got K Web here. It's a Chinese internet stocks. I would buy some of the ETFs. If you want to buy, you can buy Crane, but expense ratio is a little high. That's why I buy quality stocks. When it comes to China versus buying ETF like KWeb. But generally, I like to look at the trend by looking at this ETF. As you can see here in a monthly time frame, China and natural gas, oil and gas, and even cannabis. These are the little bit weaker sectors, including gold and silver. I would pay attention to these trends here. And even if you look at here, we got a TAN, which is solar stocks. I would pay attention to trends like this. I would look at these ETFs and see what they're holding and buy some of the quality names instead. That's the way to play versus buying this ETF, which will give you average return. And some of these ETFs have got higher expense ratio. So I will use ETF as a trend indicator, which tells me what to buy. If a ETF has crashed so much in a monthly basis, I go buy some quality stocks in that ETF. Next we got here small cap monthly winners. As you can see here, these stocks have done very, very, very nicely. And no surprise, a month ago, a bit digital was left for dead. It was around trading around $4 or $5. It made a nice comeback, mainly because institutional investors are buying it nicely. Huge institutional investor support here. That's why stock went up nicely. But if you look at weekly, it gave some back. So that's why whenever whenever the stocks are down drastically, do a little bit research. If you think it's a long-term holding, it's good to buy. Typically, I like to buy stocks like BTBT, Marathon, and even the blockchain stock, Riot Blockchain RIOT. Typically, I buy those names when Bitcoin drops. Nobody wants to talk about Bitcoin at those times. That's when you buy these Bitcoin and crypto stocks. So at these levels, I would not buy any of these things. As you can see here, monthly it's went up so much. But one thing you could do is really you could look at how it has done on a weekly basis. For example, BTBT dropped a lot. I will pay some attention here, look for some entry points as you go forward. Right now we don't have it yet, as witnessed by RSI here. RSI is 61 for BTBT. I would like to see this below 55 before I jump in. So with that in mind, all these stocks, RSI is very high. If you have to buy something, look at Garnet as example. RSI is 54, and it's got some revenue growth also. You could look at some names like Garnet here, and even Innovio is also okay, 55. There is some revenue growth here or sales growth, but typically I don't like to chase the stocks that have done nicely. Next, we look at monthly losers. Typically, I like this. Pay very close attention to monthly losers. These monthly losers can be good winners as we go forward. So as you see here, nothing crazy here. So look at the way these stocks dropped last week. ZY and even GoCo. Look at how much they dropped last week. And look at App Harvest, Root, big drop. Metro Mile, huge drop. And Grow Generation, which is one of my favorite stock, big drop here last week. And Weight Watchers, which is again big drop. Honest Brands, Jessica Alba, it's a huge drop. So what I typically do is really look at these huge drops and buy slowly into it. There is no hurry. And as you scan through here, huge drop in 1 week, but last Friday there is some improvement. So that's why I would pay attention to some names like Metro Mile as an example. They got some promise around insurance by the miles that you have driven. Look at growth generation, huge drop. States and countries are thinking about legalizing cannabis. That can be a nice trend for stocks like growth generation. Ashford, where we got a lot of insider buying, institutional buying, and we got real, along with Poshmark and Farfetch. And some of these companies, I think they will also do well. So I will look at some of those names which are dropped off pretty big. And you should also look at names like ATOS as an example. $3 stock, very low price. It's dropped off so much in 1 month, but there's an improvement in in a 2 week time frame. That tells you the stock is trying to turn around at this time. So that's how you kind of look at these names. When the stock drops like this, typically if you see some good fundamentals, for example, sales growth, 1 year, quarter over quarter, and nice gross margin, you can buy some of these names at these levels. They will do well. And even KPTI, I think there is some good yearly growth here. Do you showing some progress from a quarter over quarter profit, from a yearly profit perspective. You could look at fundamentally good companies with the greens in 1 year, quarter over quarter, and gross margin, and buy some of those companies in this weakness. I also like stock like Hexo as example. The whole cannabis cohort is down of late. It comes up and down. I would buy some of those also at these levels. Next, we'll look at mid cap monthly winners. Typically, I don't like to chase winners, as you know. As you see here, look at the RSI here. RSI is all well above 60. If you were to pick up something, you could look at something like a AVIR, $27 stock. RSI is 51. Stock has been dropping off in 1 day and 1 week. Has done okay from a monthly perspective and 3 month perspective. I would look at some of these names which are sold off at this time and take it from there. And as you scan through the RSI list here, everything else is pretty higher. I would wait for a little bit pullback before I buy. So as we scan through here, we got mid-cap monthly losers here. I know I'll pay very close attention to this list here. I have highlighted few stocks here, for example TGTX TG Therapeutics. As you can see, it's showing some life in one day. So these are the little signs that you can use. It's saying, hey, you know what, I've been pushed around so much, I can only take it so much. So it's trying to bounce back a little bit. These are some little cues that you can use to see if the stock is trying to turn around. Same story with the you could also look at stocks like SPCE Virgin Galactic. Sir Richard Branson looks like he sold a big chunk of his stock. That's why it's falling off. I think stock like SPCE you could buy at these levels now slowly, and they will make a big news splash. Stock will go up. And Poshmark, like we talked about, you could buy that too, along with stocks like Stitch Fix as example, and Farfetch and Real. And I also highlighted Overstock. Overstock typically, bounces off pretty nicely. Right now, they're trying to bounce off in shorter term, 2 week and 1 week. And that's a good one to buy. And then you got Zynga here after sold off. It's trying to bounce back nicely. Stock can only take so much punishment. It's trying to turn around here. Apply same methodology here. Look at how the stock is doing on a from a sales perspective. Look for greens in sales growth perspective, gross margin perspective. If the stock is dropped so much, there is a positive fundamental from a growth sales growth perspective and margin perspective. You could buy some of those stocks. Be a little bit careful. China stocks like TAL Education as an example, because China has changed the policy around K through 12 education, making it free. That's why stocks like TAL are dropping. I'm sure these stocks will turn around. These folks will look at the way to monetize their education service and branch out to other profit-making education services as we go forward. So next we'll look at a couple more here. These are large cap monthly winners. I will not chase these. Look through RSI here. RSI is pretty much above 55 all over the map. So I will not chase these. I'll wait for these to come down. One thing I'll point out is really last time we highlighted the upstart here. The stock went up so much. Stock was left for dead. Last time there was news about Apple doing some of these payment services, pay afterwards type services. That's why upstart came down. Now it's going up nicely. It's time to take a little profit off the shelf here. That's what I've been doing. On the other hand, Albertsons, as you can see here, stock went up big time due to short squeeze. Stock was very low a month ago. I think stock like Albertsons, it's good to take some profit at these levels. So as you see here, I love Doximity, but Doximity, as you can see, a stock went up nicely. Even up here, you could buy some Doximity and take it from there. And now we'll go into next slide here and look at some of the names. Before that, I pointed, I also like Zoom information. Stock did nicely. I think it's also a good one. Next, we got large cap losers. These are the good candidates to look at and buy slowly. As you see here, no surprise, a lot of Chinese stocks at the top. They've been down for a long time. I would slowly buy these Chinese stocks. Many of these are very good names. Stocks like BK Real Estate in China, DD is also good, Billy is a good one. FUTU is a Hong Kong, or I think it's a Hong Kong based company. PDD is good, TM is good. I would buy some of these names at these levels slowly. And then you got Coupang. I think I love Coupang. It's a basically Amazon of South Korea. Stock has been dropping off of late. I would buy some Coupang at these levels. And if you get Trip.com, Trip.com is saying, you know what, I'm done going down. It's trying to showing some signs of turning around. I would buy slowly. Trip.com also at these levels. And I love Pinterest. Pinterest stock is has dropped so much. I think it's good to slowly buy Pinterest at these levels. And same story with NetEase, great Chinese stock here. Stock has been dropping off. It's also telling you, hey, enough, I want to go up. That's why in 1 week it went up 3%, out by NetEase slowly at these levels. Exact Sciences, as you can see here, stock has been dropping off. Great stock, out by some Exact Science at these levels and hold it for a while. And then you got GoDaddy, EOG, Roku. I would buy some of these at this level too. Match.com on the other hand, stock has dropped so much. At these levels, I would buy some Match.com. Looks like online dating world. Bumble did well. Match.com dropped. I would pick up some Match.com at these levels and take it from there. Now we got mega cap monthly winners. So pay close attention to RSI. These big stocks, it's always good to look at RSI levels. Right now RSI level is pretty high. I would not chase them. I would like these stocks to come down a little bit. But if I were to buy something, I would look at candidates like Tesla as an example, 20% below its 52-week high. I would buy Tesla on a down day, and also look at Salesforce.com, 12% down from 52-week high. I would buy some Salesforce into any weakness. I think earnings will come. This company reports earnings a little bit late. It will probably come, 2 or 3 weeks down the line. Next, we look at mega cap monthly losers. So I pay very close attention here. As you see here, big Chinese name Tencent dropped 39% from 52-week high. RSI is 40. I would buy some Tencent. I would buy some Amazon, Alibaba, PayPal, Taiwan Semi, and Mastercard. Watch RSI here. A month ago, all these big stocks had huge RSI, with the exception of Chinese stocks. Now RSI dropped big time. So I would buy some, these stocks at these levels and hold it for a while. Also, we got Intel, Netflix, Visa, UNH, all good to go, and RSI is below 50. Disney, on the other hand, it used to be bad before. Now it's bouncing off. I would wait for a little, drop here as Delta variant makes its comeback slowly. Disney stock will give you buying opportunities. And I love Nvidia, good to buy at these levels. And bank stocks will always give you opportunity when there is some issue around interest rate coming down. Then you could buy some bank stocks like JP Morgan, which is a bellwether. So with that, now let's look at a few charts here and go from there. So what I have here is a 1-year chart of few of these stocks that you could buy. I got here the moving averages, the 200-day, the 100-day, which is yellow, and 50-day, which is blue, and 25-day moving average, which is green. And whenever you see stock price below all this moving average, that tells you stock is in a bearish territory at this time. Clearly, Metro Mile is in the bearish territory because current stock price is around it's around $5 or so, and it's below all its moving averages. So what I would do for stocks like Metro is really at this time I would buy a little bit. As you scan through here, I also have on the balance volume. On the balance volume is telling, hey, you know what, there is a little bit uptick here. So that's why right now, stocks like Metro Mile, even though it looked bearish, chart looks ugly because it's below all its moving averages. I would slowly buy some stock like Metro Mile here. And it also had the earnings a little bit ago. I think that's why coast is clear. You could buy some. And then you got Growth Generation here. Growth Generation had its earning last week. Stock dropped. Stock is below its 200-day moving average also. At this time, I'm willing to buy some Growth Generation and hold it for a while. As you can see here, Growth Generation stock nicely comes below 100-day moving average, bounces back, so on so forth. Right now they are below their 200-day moving average. I would slowly buy at these levels and take it from there. On the balance volume, it always happens when the stock drops big time. On the balance volume also comes down. As you see here, Stock big drop on the balance volume, came down, then picked up, then came down as you see here. And then we got AHT here, Ashford, same story. It's below its 200-day, 100-day, 50-day, and 25-day moving average. And right now, on the balance volume is pretty stable. It's flat. I would pick up some of the names like this and hold for a while. And then we got here real, as you can see here, same story. It's below its 200 100-day moving average, 50 and 25. I would buy some real at these levels. And as you can see here, on the balance volume is also trying to stabilize but still going down at these levels. Whenever chart is ugly like this, I would buy some of the stock here and take it from there. Next, we'll look at TG Therapeutics. TG Therapeutics also, as you can see here, it's below its moving averages. Stock is trying to make some comeback. Stock came down. It's a biotech stock after the earnings. I would buy some TGTX at these levels. And same story, the Virgin Galactic, Richard Branson's company. Stock typically bounces off of its 200-day moving average. Right now, they are below their 200-day moving average. I would buy slowly at these levels and hold it for a while. And right now, RSI is pretty stable. It's a little down, but pretty stable. I can see a stock going above these levels. RSI is 36, tells you stock is completely sold off. We got Overstock here. Overstock typically bounces off its 200-day moving average. Right now they are trying to go about 200-day moving average. Out by some Overstock. As you can see here, their on the balance volume is pretty stable. That's why it's a good sign, showing some signs of improvement here. This stock gives you very good trading opportunity. And then you got Zynga here. Zynga is clearly below its 200-day. It's trying to bounce off of its 200-day moving average, as you can see here. But shorter term moving averages are below longer term 200-day moving average. That's why right now it's bearish. But as you can see here, smart money is flowing into the stock. It indicates the on the balance volume is showing some tick up. That's why it's good to buy some Zynga at these levels. And same story, you could buy Take-Two, Activision Blizzard, even EA, Electronic Arts. All these stocks have come down to the earth with the market opening a little bit, and people are going out slowly. Next, we got a couple of more names here. FUTU, which is a financial stock, stock. I think it's based in Hong Kong. As you can see here, it came below its 200-day moving average. I think this one is a good one. You could buy slowly into this. I think they got earnings coming up in 12 days. They can do well after the earnings, especially stock is down before the earnings. And then you got here Pinterest. Pinterest typically trades off of its 100-day moving average, but now it came below 200-day moving average. I'm sure it will go above 200-day moving average. Use it as a support level. I would buy some Pinterest at these levels. And then you got NetEase here. NetEase typically trades with the 100-day moving average. Right now they broke below 200-day moving average, and earnings in 4 days. I expect the stock to bounce back from these levels. And then you got Exact Sciences, as you can see here, below its moving averages. As you can see here, out by some Exact Sciences at these levels. Stock typically bounces off nicely after selling off so hard. Right now, I think there is some stabilization slowly in the on the balance volume that tells you people are slowly buying to the stock, but still it's a little bit downturn, as you can see here. So we got a few more here in the mega cap area. As you can see here, Amazon.com is trying to bounce off of its 200-day moving average here. I think this company will do well. Completely oversold at this time. RSI 33. Even if you want to buy some long-term call options or call spread, you could buy that with the low implied IV rank. So I would buy some Amazon at these levels. It's trying to bounce off of its 200-day moving average. And then you got Visa. Visa is trying to bounce off of its 50-day moving average here. out by some Visa. It's a great stock. As you can see here, it always tries to come down. Here it came below 200-day moving average, bounced nicely, touched the 100-day, bounced nicely, touched the 50-day moving average, bounced nicely. So out by some Visa at these levels. You could also look at Mastercard, PayPal, Square, all in the same fintech area, and even AXP, American Express. And then you got Nvidia here. Nvidia is trying to look at a 25-day moving average. Use the 25-day moving average as a support level here. I would buy some Nvidia anytime it comes and touches the 50-day moving average. It's a nice bullish territory here. Clearly, the longer term moving average below short term moving averages, that tells you it's in a bullish territory. On the balance volume is going up, that tells you smart money is pouring money into NVDA at this time. On the other hand, Taiwan Semi is in a little bit bearish territory right now. Still it's doing okay because 200-day moving average is below 100-day moving average. But right now it's in a bearish territory. I would take advantage of this, buy slowly into this weakness and take it from there. So with that, you might wonder, hey, there is a lot of stocks. What do I do? How do I buy these stocks? Here is a quick cheat sheet for you. So look for stocks that are oversold, RSI less than 50, and recovering in the shorter term time frame, like 1 week or 2 week. Always, buy and sell in stages. For example, you bought a stock which is completely oversold. Stock dropped big time. Buy maybe good chunk, say 50, 100, 200, depending on your account size. Buy in stages. For example, if you want to buy 1,000, buy 100 at a time. If you want to buy 100, buy 10 at a time. That's always a good way to buy these stocks. And look for even sellings to do same thing, sell in chunks. Sometimes these stocks, especially on a short squeeze, they go up so much. You don't want to sell all of them and in one shot. Sell in chunks. Even if it comes down a little bit, that's okay. Always follow buying and selling in chunks. And look for stocks consolidating for a while and then showing some sign of bullishness. That's the way of those stocks telling you, hey, enough is enough. I can't take it any longer. That's why, buy some of those stocks. Even though they're down, they're showing some signs of improvement or turning around. For the stocks nearing 52-week high, look for a pullback. As we talked about today, look at the 25-day moving average, 50-day moving average, and 100-day moving average. By looking at a stock, you can understand their history. Typically, they bounce off of one of these moving averages. That's your sign. That hey, pullback has happened. For example, great stocks like Nvidia. Maybe 25-day moving average is good. Maybe some of these not so great stocks, they have a little more ups and downs. Use 100-day moving average. For example, maybe Merck, maybe UNH, maybe 100-day moving average or 50-day moving average is good. And then look at the stocks nearing 52-week low. Whenever a stock is nearing 52-week low, look for a sign of price increase before buying. So that way it's going to go up. There is some signs. And whenever stocks make a huge drop, look for some signs of bullishness. Typically, we don't catch falling knife. That will give you a little more advantage. And when you see a high short ratio, that can be a good catalyst. So this is when you can make some good swing trading opportunities with the high short ratio and fundamentally good companies. And look at insiders or institutions buying the stock or selling the stock. That tells you something about the company, and sometimes that's a good time. And whenever an insider is buying the stock and stock is a big time down, that tells you insider has a conviction. You could buy along with the insiders. And typically buy fundamentally good companies. That's why I provide things like the sales growth, gross margin. Look for rule of 40, where sales growth quarter over quarter plus gross margin, greater than 40. When that happens, these are fundamentally good companies. And look for secular growth names. Think biotech, think technology. If they're down big time on a bad news, maybe it's a FDA approval, maybe it's a clinical trial, maybe downgrade, maybe earnings report. When they're down big, you could venture in and buy a little bit, so that way you can take advantage of nice bounce back. So with that, thank you very much. Happy investing and trading. Please subscribe.